Testing, testing. Hello. Sorry. Morning, everybody. Microphone wasn't working. Very weird. How are you all doing? Morning, Danny. Morning, Don. Morning from Perth. Hello. Whereabouts in Perth are you? I've got relatives that live in Darlington. Morning, Ace. How's it going? Right. So this morning is Friday. We've just had some news. The pound has had negative news. Guelph. Don't think I went to Guelph. Can't say I can remember seeing a sign for Guelph. Mind you, Darlington's miles outside of Perth, isn't it, really? It's amazing in Australia, when someone says they live in Perth, it could be half an hour away from the middle of the like city centre, couldn't it? It's a big place, Australia. Morning, Virginia. Morning, Chris. Right, so this morning's news is pound GDP. It's a miss. It's not massive, but it is a miss. Recessionary, obviously, because we are a negative. So we weren't expecting the GDP to drop, but it's dropped a little bit further than expected. So a little bit of a negative on the pound, not massive. However, it has prompted me to get out of my euro pound. Whether it's the right decision or not, I don't know, but I have got out of the euro pound. So I'm out of that one, which is great. Had a bit of a better exit on it yesterday, but you know, just in case the market does sell the pound off, obviously, it doesn't make sense not to get out of this. It's been a squeezy nightmare, the euro, and I still think the euro has got more downside on it. However, if the euro is weak and then the pound weakens today, all we're going to get is this. So I've got other pairs on, other trades on at the moment on euro, which obviously will benefit from a euro drop. So I'm taking that one off, or I have taken that one off, and that's done. So we'll see what happens with the pound this morning. Markets are open. FTSE's probably rallying, I would imagine. No, bloody hell. Drop on the FTSE this morning. Mind you, there's no correlation between currency and stock index at the moment because they're just selling every stock on the planet, aren't they? So nice big drop again this morning. Pre-market was too small for me this morning, but if you have taken pre-market, you're short, and pre-market short on the DAX with SIH. SIH had its first, well, technically it's a down day. Lost £1 yesterday, £1.41 to be fair, less than a cup of coffee. So yeah, first day for a long time negative on SIH. So yeah, bizarre. Anyway, it's because I've become accustomed to just making money every day without doing anything on the stock indices. So it was a bit weird yesterday. I was like, what do you mean you haven't made me money? Very odd. So yeah, we'll see what happens today. But we're short DAX. We'll be going short on the FTSE as well. By the looks of things. That's going to trigger in a minute. So yeah, so that's this morning's news out of the way. We've got PPI this afternoon, Producer Price Index month on month. They're forecasting. Oh, sorry, no, we haven't. That's yesterday. This afternoon we've got University of Michigan. Now the UOM figures at the moment are really rocketing the market. So although these are, the market doesn't move because of the number, because it's basically a survey of 500 people. So it's not something you can really take into account as, oh, yes, that's definitely what the rest of the world thinks. Actually, it's 420 consumers, not 500. But the market does move this on Fridays, basically because it's end of week. It's a high liquid event, so therefore we just get a lot of movement off of it. It's not going to take off necessarily, but there's likely we will get a big move. So be prepared for some volatility at 2 o'clock. That's half an hour after market open. So first 30 minutes of the index open this afternoon might be a bit wavy, a bit sideways, but we'll see what happens. So that's the only news we got this afternoon. Morning remote, morning Nav. overnight news. There's a lot of stuff going on at the minute everywhere. We've just had an announcement in the UK that we're scrapping the NHS. Not so much scrapping the NHS, but scrapping a portion of it. So how the markets will see that, I don't necessarily think it's going to have an impact financially, but obviously there's going to be a cost involved. It's meant to be a cost-saving exercise, but there's going to be monetary involvement everywhere at the moment. But I don't think it's going to make a lot of difference. But more cuts basically on weaker GDP data. That's just not really going to affect it too much. There's your GDP. The other overnight news that we've had, UK manufacturing production. 400 error. We had a 400 error overnight as well. We couldn't satisfy the request. But other than that, overnight, there wasn't an awful lot. Trump didn't say an awful lot yesterday that was new, apart from obviously putting 200% tariffs on champagne. Yeah. This is kind of a prime example of how ludicrous everything he's doing is. He's putting all these import duties on for other countries, basically, to force the US to manufacture and sell within the USA. Make America great again. Yeah. So he's put 200% import duty on wine and champagne from France. You cannot manufacture champagne in the US because it's the Champagne region of France. It isn't champagne unless it comes from Champagne. So putting 200% tariffs on something isn't going to help you manufacture it in the US, is it, Trump? Wake up. Anyway, that's just another really good example of the high-quality decision-making process that's going on. Trump avoiding a trade war. He's becoming very Putin-esque, isn't he? He's like, I'm going to shoot you. Bang. Hey, why did you shoot that guy? I didn't shoot him. Yes, you did. I saw you. No, I didn't. That's basically the way it works in Russia, isn't it? We do something, and then you tell us that we've done it, and we go, no, we didn't. Prove it. Well, I've got it on camera. Nope, that's made up. Yep. I'm avoiding a trade war. No, you started the trade war. Nope, I'm avoiding it. My life at the moment just feels like I'm being pulled in a million directions by Trump. US to place sanctions on Russian oil, gas, and banking. So ramping up the pressure on Russia. Now, this is a good thing, I have to say. Well done, Trump. Doing one thing good, which is not really going to affect US or markets in any way, shape, or form. But that's what we had overnight. Other than that, really not a lot else. S&P falls 10% from February record. Enters technical correction. Beg to differ. Where's the technical correction there? Sorry. Where are you seeing a correction? I'm seeing more downside. There's no correction there. Oh, it's entering a technical correction as in, yeah, we're correcting this whole thing. Yeah, right, okay. That makes sense. But yeah, S&P obviously dropped again. But other than that, really not a lot else going on at the minute. Tesla's still collapsing. Come on, we can do better. We can make Tesla $100. Come on. Keep selling your Teslas. Don't buy anything. Buy Japanese. Tesla warns Trump administration is exposed to retaliatory tariffs. I think we're about to see a fight. I think there's going to be a fight in the White House, isn't there? Trump and Elon. I think I know who's going to win that one. But yeah, anyway, so that's about it overnight. Nothing much else going on really overnight. But we'll wait and see what happens today. Today's a new day. So that's your news. Just quickly look at where we are. Short on the FTSE. FTSE looks like it's going to hedge today. DAX, see where we go. But we are broken to the downside. What have I got on here? So this is ORB version 3 running at the moment. Basically, I finished this off yesterday. I've finished all the back testing. I'm going to go through the back testing quickly this morning as well. Which is there. I can't get it up onto the marketplace, unfortunately. The marketplace is incredibly, I don't know what it is at the moment. It's either incredibly buggy or they've either, I don't know, tightened restrictions on code or something. But basically, as you can see, it's taken a trade this morning, put the stop losses in place, absolutely fine. When I try and upload this to the marketplace, it gives me an error 130, meaning that it cannot place the stop loss or the take profit where I'm asking it to be placed. I've backtested the exact time period that the backtester is running on. It does exactly what it should do in exactly the way it should do it. All the code that they've said that needs to be fixed is in there, and it just won't upload to the marketplace. So screw you, MQL5 marketplace. I'm selling it on my website. You can't get it anywhere else. Can't do anything about it. They won't let it upload. So that's the situation with ORB v3, which is this. So I'm going to finish this off today, get some documentation done on the website and stick this out live on the website. But unless I can figure out what the hell, because they don't tell you what's wrong with the code, unless I can figure out what is wrong with the code, I can't get it up on the marketplace, unfortunately. So, but anyway, I will keep trying, and I've got to do the MT5 version this morning. So yeah, so basically this version of ORB, which is pretty much the same as a normal ORB. There's a 10-minute ORB in play at the moment there. Nothing so far on the FTSE. Ranges are not right. Right, so morning it's time, morning FTNet, morning Joe, how are we all doing? Happy Friday. So going to go through the markets this morning, have a look at how everything is doing. We haven't got much going on this morning. There's an ADR on the pound New Zealand. That's really the only thing we've had movement on this morning. Obviously, the pound is dropping. So all the pound pairs are coming down, obviously, on the back of the GDP news. It's not dramatic. This one, obviously, has just tapped ADR. So there's a 5-minute reversal. Just gone in there. Beautiful 3-bar reversal as well. That's a lovely signal. So see if we get that MA cross, but basically straight off of ADR, 3-bar reversal, moving average is just about to get crossed over, and we've had a reverse alert. So all 3 signals from the position trader EA triggering there, 3-bar reversal, reversal alert, and we're just about to trigger an MA cross. Off we go. But obviously we just had GDP news, so might not be the strongest signal in the world this morning, but we'll see. So that's an ADR hit. Weeklies have kind of all played out, really. So if you look at the weeklies at the minute, the hit was kind of there, really. So you've had 2 attempts to get onto that so far this week. Euro New Zealand hit. Obviously, all these euros are all starting to play out now. So I'm holding these as long as I can. That euro pound I've just closed. I've only just closed that because of the pound news. I've also got pound US shorts on as well, so they will be doing well. But I still think there's a much bigger correction coming on this euro. But we are reliant. What we really need at the moment is Trump to shut up for a week, just so that the markets can correct themselves and readjust and take in what's going on at the minute, really. And then obviously he can do what the hell he likes, but we just need a bit of peace and quiet so that these markets can figure out basically what they want to do, because at the minute they're just being forced into panic selling. The fear and greed index obviously is starting to rise. Last one yesterday, we were at 16. We're still at 18 actually, so we did pop up to 18 stroke, was it 19? Might have been 19 the day before, but we're still all the way down here. Yeah, so stock markets are not going to recover at the minute while this is where it is, and it looks like the Europeans are getting the safe haven status at the moment, because if you look at what's going on with the yen, that certainly is not powering up. It has been. And same with the Swiss franc. There's not a lot going on with the Swissy at the moment. It's weak. So we're getting, usually when markets sell off in a panic, the Swiss and the yen get rallied. We're seeing really nothing like that happening now. I said in the Discord group the other day, I'm not 100% sure if the yen is going to retain its safe haven policy now, and obviously, or its safe haven status, and the Swiss franc doesn't seem to be either. So we'll see what happens. But at the minute, it seems to be the euro is the main beneficiary, obviously, of what's been going on in Trump land. So we'll see what happens with these. But Euro New Zealand obviously was a weekly reversal, but the weekly reversal was on Tuesday. The same with all the others. Euro Swiss, you hit on Wednesday. Actually, you hit it on Tuesday, and then Wednesday just ever so slightly tapped it. Reversal alert went in there. It's a multi-week M as well. So easily potential to come back down to ADR today. Euro CAD, that one was hit there. Obviously, look at my exit. I got it absolutely spot on. I picked the high. I got out of all my shorts at the very high. It takes a lot of skill to get out at the worst possible place in a move. Yeah. That takes years and years of training to get it that wrong. Anyway, I got it wrong. So reversal alert went in. And now we're off on our way back to correct that leg. So we'll see how far that manages to get. There's no CAD news today, but University of Michigan will rally the US. And as well, as I said, normally the CAD runs with the US. However, the CAD and the US are no longer trade partners. So quite how that is going to affect correlation, because correlation between the US and the CAD is typically very high. I'm not sure that's going to be the case anymore, is it? You can't get your wood from Canada. You can't get your alcohol into Canada. Therefore, are they going to move at the same time? So stuff that's good for the US is typically good for the CAD, and vice versa. Is it anymore? I don't know. We'll have to wait and see when we get the biggest, when we get some movement off of financials, off of fundamentals. We'll see if the CAD reacts, because normally you see both react at the same time. So, you know, it's a learning curve for everybody at the minute, this. Euro odd is the other one, which is a weekly. So again, I got it absolutely spot on. I think I was about 5 pips off the high, so I could have done a bit better, but you know, I got out at pretty much exactly the wrong spot. Reversal alert kicked in, and the retest, M pattern reversal. We've retested propulsion to the downside, so we've got this double bottom low today. If that breaks, we're off. So we'll be down to 125 ADR today, if or not necessarily today, but that's the next target. So we're looking for the double bottom to break today. If the double bottom breaks, obviously this is our next stop. So yeah, potentially we're looking at these highs, which is that low there, basically. So that's your downside target today in propulsion. That propulsion gap held beautifully, like M pattern out of the propulsion gap. And that one obviously held as well. So they are selling. So we got sellers well and truly in control of the market at the moment. We just got to overpower yesterday's buyers, and then we're done. Off we go. And from there, I don't think we'll see a retracement in the euro, unless obviously Trump does something to the euro. Morning, Dennis. How are we doing? So those are your ADRs and AWRs. Monthlies, I don't think really you can pay any attention to the monthlies. These are obviously monthly extensions on all euro pairs, but this is not normal movement. So yeah, I mean, it is an alert. It's telling you that it's extended. We know that. It got extended very, very quick, didn't it? So the only other extensions we've got are CAD Swiss, which is probably worth a look. That's a monthly extension. It's already played out. Missed it. So that happened on Tuesday. Monday, Tuesday, we started the reversal. There's a reversal alert gone in there. So looking for a pullback on this leg. We've got a monthly low there, which is going to be that propulsion gap, which is your next upside target. We've got a double weekly low there, which got retested. So that would be the second target. So targets to the upside around 125 to 175 ADR. What else? We've got extended. These are euros. pound Swiss. So again, Swiss franc. That's just that move there that's caused the extension. So that's not an extension. Okay, there we go. So there's all your RSIs, ADRs and AWRs, etc. RSIs are flat still. So obviously with everything that we've had, all these huge extensions and squeezes, they're all starting to undo themselves now. So RSIs are back to normal levels. And we're waiting to see if we're just going to continue the grind and undoing, or if these are pullbacks in continuation legs. That's the question. It looked yesterday. What were we looking at yesterday? I think it was one of the Aussies or the New Zealands. Yeah. So these Aussie pairs, basically Euro Odd and Euro New Zealand. Euro New Zealand's already broken down below yesterday's low, which is good. So it was looking potentially yesterday like market structure continuation here. We were pushing up into propulsion. If you watched yesterday's member stream, which you won't if you're not a member, but if you were, you would see me saying yesterday, this next candle, because this is where we were yesterday when I was on stream, this is an important candle. So basically this propulsion gap that's just been invalidated, we need to see the sellers step in there to confirm bearish market structure, and that's exactly what we got. So it was either going to be a continuation long, or it was going to be the reversal alert, holding, retest, and continuation short. And that's what we got. So that was the sell point yesterday. So yeah, it's good. But until we break this area here, so this rally on these on these Australasian pairs, basically, this was the balance that we broke, and this propulsion gap was what got rebought. So this previous resistance retested and went. So on the way down, this is going to be your main sticking point. So any market participants that entered long here and added into their positions that have not exited will be looking to defend that zone. So this is where we're looking for basically buyers to step in today. Highly likely when you get to ADR today, you're going to get a bounce of some proportion. So it's either going to work, or they are just going to get overpowered and we're just going to get market structure continuation. Then that propulsion gap's gone. If that propulsion gap goes and we get down to this area and this doesn't hold, that's where we're headed. There's absolutely nothing in here. It's clear air until we get down to this previous break point. So it's a tricky time for this one. It's one of these when you're short, and with a fair amount of size like I've got on at the moment, you tend to get scared by every single bounce. So the best thing to do with these types of moves is to get yourself up a time frame. Yeah, because if you're watching this on the 15-minute chart, every time there's a move above an MA or a reversal alert or any kind of bullish movement, you're watching micro levels basically within here, which is fine. But on the hourly chart, you can clearly see this is the zone where the buyers took control of the market. Yeah, if you move up onto a 4-hour time frame, when you hit that area here, if you see basically a 4-hour candle coming down with a wick like that, it's not very scary. On an hourly time frame, what you're going to see is them hit it, reject it, and push back up. You're going to see a 3-bar reversal pattern, which is going to scare the life out of you. On a 4-hour time frame, you won't see a reversal. You'll see bearish price action. So moving up, when you're managing positions, moving up a time frame from where the entry was taken. So in this case, this is an hourly RSI extension. I'm trading hourly charts. When you move up a time frame, you're filtering out all of that scary price action. So I'm going to see 3 candles going today. That's it. And if all 3 of those candles are red, there's absolutely no reason to get out of this. On a lower time frame, you're going to see a lot of green while the red is being formed, which is going to scare you. So move up. Daily's a bit too slow. But looking at it on the daily, what we're looking at is that support resistance level is there. It's this candle. Yeah. So we're looking for this, which is the last batch of sell orders that went in, to be tested. Yeah, we know that everybody in here got overpowered and turned into buyers. Therefore, we're going to see price action there. So, you know, time frames are literally just a human construction of price over time. It's just the way that you see it is either top level or granular. The more granular you go, the more signals you're going to get, the more false information you're going to receive, which is why M5, where everybody tries to make all their money intraday, is so hard to trade, because you are literally trading algorithmic chop. You're trading orders being placed into the market in the trillions. Yeah, of course, it's going to go up and down. It's going to give you lots of signals when buy orders go in. It's going to get you lots of signals when sell orders go in, but it's just chop. When you're moving up to the hourly and above, you're seeing clear price action, long-term buying and selling. Much easier to act on this. It's very, very clear that the sellers took control there. We got a reverse alert. They retested the reverse alert and they added more positions in. On a 5-minute time frame, you'll see 100 signals to go long and short. Yeah. Same when you're managing trades. The higher the time frame, the less mess you get. This green candle here, which happened after that, at that 3-bar reversal there, yeah, on a low time frame, people would be scared of that. That's not scary, is it? That's really bearish. It's a spinning top. It's a continuation pattern. Bear candle, spinning top. Buyers couldn't take control. Bear candle. Yeah, it's all bearish. But drop down M15. Yeah, scared to death yesterday. Shouldn't have been scared to death yesterday because the price action ended bearish. So there you go. So that's Euro New Zealand. There's no RSIs to look at, so nothing else to look at there at all this morning. Let's have a quick look at what the indices are up to. Hedged on the DAX, hedged on the FTSE. Oh, good. It's going to be one of those days. Right, so levels on these two this morning. Where are we? DAX. So, it's tricky to the upside, isn't it? We've got some potential symmetrical triangle formation on the DAX. So we've got contraction forming at the minute. Market not really knowing which way to go this week. Hence why yesterday was not particularly good. Whenever you're going into contraction, contraction is indicative of chop. Chop is not good for breakout strategies. Therefore, mean reversion is what you wanted to do yesterday, but you didn't know that until the day was over. So it didn't help. So at the moment, obviously, looks like it's trying to break long. So we've got multiple targets to the upside. Yesterday's high, previous day's high, and then we've got that weekly level coming up as well. So this area here is quite big. Anywhere in there, we could find selling price action. If we manage to break through all three of those today, that's what we're heading to, the propulsion gap. So there's potentially a 125 ADR move before we come and retest the origin of that move. So my 5R at the moment is kind of just below the low of the propulsion gap, which is around about this area here. So it's not a bad looking level. We have rejected that area and then we rebought that area and then we broke through that area and retested it and sold it again. So this is a decent level historically, which has been a pivot point multiple times. So it's not a bad target. If you want to be aggressive, an exit in one of those two or somewhere in there is probably more likely. But obviously, as it's a hedging strategy, you would need to manually rehedge that level. Downside target, very easy. It's basically the lows, isn't it? So we got weekly, can't see, it's behind my head. Weekly low down there. Yeah, so it's this area here, this propulsion move. We've been buying this up over and over and over again. That is my downside target. So I'm just going to move it up ever so slightly, just within the most recent level. So that's going to be about 4.5R to the downside. That'd be exit. Upside, going to leave it where it is, I think. Although that's a really decent level, isn't it? That's really tricky. There's so many points to the upside. So as I'm going to be watching this, I'm going to go with this weekly high because I can rehedge this if we break it. So I'm going to enter that area there as target to the upside. look for a bounce, and if the bounce is big enough to get me out on an aggressive exit, that's done for the day. If the bounce isn't big enough and we accumulate and break, I can re-hedge and then go for some exit up in the propulsion. Let's have a look at the FTSE. Yeah, FTSE 5R, very nice, easy level. So it's this area of accumulation. We broke, tested. Sellers are there. Downside target, low of week, easy. Obviously, that would be an aggressive exit to the downside. Rebuying this propulsion gap. So if it bounces off the 2-day high, or yesterday's high, sorry. If it bounces off yesterday's high, it's likely to bounce off of yesterday's low, and we're going to just stay in that accumulation. So you can make a decision on this. If we bounce at this high, you could try and exit there. Failing that, that's the safer exit. I'd rather stay hedged at the moment, to be honest, because I've got other things that can make me money, and I'd rather sit there safe at the moment. But upside target, very easy. Obviously, ADR, we've got a new propulsion area at ADR, which we sold off on Tuesday, Thursday, Wednesday, Tuesday, Monday. And obviously that was the additional selling from that original sell that went in there. So that's an add. So there's going to be resistance there. So if we did break that level, that would be the next area to attempt an aggressive exit. There we go. So hedged on those two this morning. We'll see how those play out. ORB V3, 2 nice clean breaks. There we go. So nice break to the upside on both in profit. So the way that I'm running this is with partial closes. So at 3R, I'm taking partial profits of 75%. Obviously, it's got to break that level first. So we'll see. Mind you, that's not real because it's pre-market. So there we go. Morning, Pot DJ. Morning, Harold. Right, that's all I've really got for you this morning. There's not much else to look at the minute. We're waiting to see what happens today with these euro pairs. There's very little news until we get to Michigan later. So it's just a case of usual. Keep your eyes peeled on what is going on. Trump's view of the economy is a losing view. Fight. Come on, EU. EU has the resources to retaliate against Trump's threatened tariffs on wine and liquor. Yeah. So don't forget, obviously, with when I say about this 200% tariff on champagne and wine, basically from France, it's talk. It's all talk. So everything that Trump says is rumor. It's not signed. When he signs a piece of paper, that is in stone, and that will affect things. Everything that he says at the moment, which is driving the euro down at the minute, or did yesterday, I'm thinking of doing something. Yeah. Doesn't mean anything. Buy the rumor, sell the news, or sell the rumor, buy the news, one or the other. But whichever way the market goes on something that is said is not done, which is why 90% of Trump's moves mean revert most of the time. Yeah, because he just says stuff or tweets it or posts it on his social network, and then the market reacts and goes panicky, and then it goes, actually, it's not really something he can do. Or if he does that, the opposite will be done by the other party, which will cancel it out. And you just find A-shape and V-shape recoveries flying in all over the place. Yeah. It's the norm. It's just what we're used to with Trump. It was the same in the last time he was in. It seems the same this time, except this time he's obviously shaken the world up a little bit more. So we will see. If buy from your website is easy to download onto platform, I've only ever bought stuff via the marketplace. Yeah. So if you buy anything on my site, it's very easy. So whatever you get, you basically whenever you buy anything on my site, the way that I've set it up basically to make it super easy for people is you just buy it whatever you want. You can also download the demos and stuff. And when you go through the checkout process, basically at the end, it redirects you to go to the download demo section of the site here, where you just download it, and you click that and it downloads a zip file. Yeah, in that zip file is the EA and instructions on how to install it. Yeah. What the hell did I just click there? Pin to start. I didn't want to do that. So when you open or download anything, basically it goes here. Yeah, and in here is an EA. So there's the EA. That's the EA, fully functional EA, but it needs a license. It won't work without a license. And there's the instructions. So the instructions basically tell you exactly what to do. So all you do is you go into your options in your MetaTrader platform. You put that URL in as a URL that the terminal can contact. So it's in expert advisors. Yeah. So you just basically allow web requests to the license check website. Yeah. And then you copy the EA into the MQL4 folder. So when you go to File, Open Data folder, that opens your data folder. You go to MQL5 Experts, MQL4 Experts, and you dump the file in there. That's it. Done. So there's full instructions on how to do everything. It's very easy. But I'm always here in Discord, Telegram, here, email. Yeah. There's loads of ways you can contact me. So how many licenses did you get? 5 brokers. I don't do it the same way as MQL5 because I can't, because I'm not MQL5. So basically you get 5 brokers, 5 brokerage accounts. And you can change them anytime you like, and you can add to them. So when you you can't actually access it from the website. I might need to put that up there. So when you buy, you get sent to this page. Basically, complete this form. Basically, you put your order number in, and your account name, and account number. Yeah, and you can put up to 5 account numbers in. Yeah. So if you've only got 2 trading accounts, one demo, one live, you put your 2 accounts in there. That's it. You're done. If you set up a new brokerage account, you just give me the license number, the account number for that brokerage account, and I'll add it to the licensing system. So you can have up to 5 brokers, which means you can use it on unlimited PCs for life. Yeah. So not like MQL5 Marketplace, where you download it and then you put it on your computer, your laptop, 2 VPSs. Yeah. That uses 4 of your licenses. Then there's a Windows update, which redoes your PC number. It basically re-rolls your PC number, which uses up instantly another 4 licenses. Yeah. And then your VPS gets updated, and that uses another license. Yeah. I'm just doing it on brokers. Yeah. You can have 5 brokers. If you've got more than 5 brokers, you're making a shed load of money. Buy another license. Yeah. It's not expensive. So so I've just done it on brokers. And then if you shut down a brokerage account and you set up another one, just fill out the form and I'll set it up with a new license. I can be flexible, and I'm a human being that answers support. I'm in Discord 24/7. No, I'm not. When I'm asleep, I'm not in Discord, but I'm in Discord all the time. I'm on email all the time, and I'm in here. Yeah. Unlike MQL5, when you go to the marketplace and fill out the contact form, you have to go through that robot. And that robot tries as hard as it can to answer your question, but when it can't, it goes, I'm going to start again. And you can't get through to contact anybody at MQL5. And if you do manage to get through the bot somehow to get to the form to fill out to put a support request in, it takes 2 days for them to reply. Yeah. That's why I'm trying to get away from the marketplace. It's too restrictive. It fails. It breaks. They don't take PayPal anymore. There's people in the world that cannot pay on their cards because for some reason their cards don't work, but everybody else's does. So I'm basically trying to dump it. but I can't because everybody that's bought from it still uses it. But any new sales for new products, I'm not putting anything else up on the marketplace. It's all going through here. And then, you know, you haven't got a problem, have you? So, and also I can do sales. It's brilliant. I've got 25% offer on at the moment. Fill your boots. I can do that because there's a system on my website that allows me to do sales. There isn't one on MQL5. It doesn't have any of that. I can do affiliate programs and all sorts of stuff if I wanted to. I'm not sure I want to, but so yeah, it's very, 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 very simple. But if you're finding it not simple, reach out. But I've put together documents, you know, how to do everything basically. So it should be fairly straightforward. But you know, we will see. MQL5 is such a buzzkill. Was looking forward to version 2. Hope it works soon. I prefer the marketplace, but understand how buggy it gets. Yeah. I just can't upload it. I can't upload it, right? It's just, it's not letting me. Unfortunately. Right, so these are the messages that I get from MQL5 here. Yeah. Automated product validated with errors. Yeah, so this is me trying to upload the opening range breakout version 3. Okay, this is the error that it gives me. Opening range breakout EA version 3, Euro US dollar H1. Yeah, on the 2nd of May 2022 at 4:35, it tried to place an order and it couldn't. Error 130. How to fix it? You go to this website and it says how to fix it. The symbol trade stops level, minimum level. Basically what this is saying is when you place an order, some brokers have a minimum distance between open price and stop loss and take profit price. You need to check how much distance there is between the stop loss and the take profit and compare it to what the broker is allowing. And if it is too tight, you need to move it to the broker's minimum. It's all in there. The code is all in there. Yet I still get error 130. So I thought, oh no, what I'll do, I'll upload a new version of the EA and I will use a fixed lot size and I won't put a stop loss or a take profit on the order. Yeah, because this order error is with stop losses and take profits. So I'll basically place the order without a stop loss or a take profit. Still get error 130, right? So the error that it's giving me is physically not possible to produce with the EA because the EA does not use a stop loss or a take profit. So how can you have an error where you can't have the stop loss or the take profit closer than the broker's allowed minimum when it's not placing a bloody order? It's just, you know, someone in MQL5 needs to come into the real world and understand that it doesn't have to be this restrictive and strict on how to do things. Look at this, all passed, right? I'll upload that exact same version, 2.7, and it will give me a failure. It's like, well, how can it fail one day and not the other? It's just, they're just making their life so difficult. And removing PayPal as a payment option is just like suicide. 80% of people use PayPal. Oh no, let's get rid of that. It's the most popular payment method on the planet. So yeah, I'm still trying. I spent pretty much all afternoon, good 3 or 4 hours, recoding, stripping code, testing things, doing this, doing that, and I just basically gave up and went to the gym. Had enough. I'm sorry. If you've bought the opening range breakout EA 2.7 and you really want version 3, contact me. I'll give you 20% off. But it's going through the website because I can't get it up there. So it's not like I'm not trying. I've been trying all day yesterday. I just can't get it there. So I'm going to recode it for MT5 today, and I'm going to try the MT5 version. If that squirts up straight away and the MT4 one doesn't, that basically hammers home my point. It's the same code, the same logic. If one works on MT5 and not on MT4, there's a massive problem with your system that you're using to check EAs. Sorry, but it's a bug as far as I'm concerned. So anyway, I just can't do anything with it. It's driving me nuts. It's wasting my time. You know, I spent all yesterday afternoon mucking about trying to get something squirted up there so that I can get it over to people. I can't do it. Yeah, it's frustrating. Morning, Peter. WD scan. W WD scan. You run the new index EA without a VPS. What? WDS can. That's your name. Why have you typed your name in front of? Sorry, I'm trying to read what you put. I'm going to take you. Okay, can you run the new index EA without a VPS? As I like to be out at the end of the day anyway. Yeah, yeah. All EAs can run without a VPS. This is not a VPS. You're looking at my computer here. This is. I never run. I don't run any of the ORB strategies on a VPS. I run them on my local terminal. The EA exits end of day for you automatically anyway. It's not an option. This version will. You don't have the option not to close end of day. It closes end of day. You can obviously turn your terminal off. Then it can't close end of day. Up to you. But the strategy is an intraday strategy. So if you have trades on like this, and I'm sitting here at 11 p.m. on my chart, which is 9 p.m. UK, it will close all those trades out. Yeah, it doesn't hold overnight. And if there's pending orders, it will auto cancel all pending orders. It does everything for you. It even changes the chart time frame. Yep. So if you open your charts on a 1 hour time frame and you place the EA on, it will switch the chart over to M5 for you, because this is an M5 strategy. You don't run it on any other time frame, so it automatically forces you onto the M5 time frame. So much better. This version of the EA is just belts and braces. It's but there's also stuff in the marketplace as well. If you look in the marketplace, it says in the marketplace embedding any limitations by time, account type or number, financial instrument, etc. is prohibited. Yeah. So basically what this is saying is you cannot have EAs on the marketplace that forcibly run at a specific time, right? This is the opening range breakout strategy of stock indices. Stock indices open at 8 a.m. I think one of the problems I'm having getting this on the marketplace is it's trying to trade, as you can see here, on the hourly time frame. Don't be stupid. It's a 5-minute opening range breakout strategy. Why would you trade Euro US dollar hourly? I don't want you to test this time frame and this instrument because it doesn't trade on it. Yeah. I can't get past this restriction because this restriction is limiting time and instrument. Yeah. I am telling you, you do not use this on anything but stock indices on 5-minute time frames at 8 a.m. Right. And if you don't want me to upload that sort of product, fine, I won't upload it. I can't upload it. But if that's the case, why did you let this one through? Version 2.7, and you won't let version 3 through? Yeah, it's how ludicrous this is. It's just fucking ridiculous. I'm fed up with it. I've had enough. I just can't spend any more of my life trying to battle the Russians. I've just, you can't fix a problem which is stupidity at the end of the day. It's a time frame based, instrument based strategy. If your marketplace isn't right, I can't do anything about that. Either change it or don't. If you don't, I don't care. I now have my own marketplace and I shall sell it there. Anyway, that's what I'm up against, So I'm not delaying the launch of it or trying to be awkward or trying to get more money out of people. I just bloody can't do it because it's in the arse. But anyway, and this is the thing that gets me the most is the inconsistency. If that is true, yeah, why did you let me upload it for the last 3 years? Yeah, they haven't just this has always been there. I think they just tightened the belt for some reason. Something's going on in MQL because this whole thing of now not taking PayPal. Why? Yeah, someone somewhere has gone and they've put restrictions on here somewhere, haven't they? Because you won't just give up the payment method that everybody uses. And all the overseas cards, I get lots of people from Africa who buy indicators and things who can't now because their cards won't work on the marketplace. Someone has bought on my website, no problem. So there's nothing wrong with their card. MQL5 say there's a problem with your bank. They phone the bank and go, no, there's a problem with the transaction. You go back to MQL5 and they say there's a problem with your bank. So the person is stuck in the middle going, well, one of you's right, one of you's wrong, but neither of them are going to admit liability. They can use the card on my website, fine. I use Stripe as a payment processor. They don't have a problem. They take money. That's it. You know, there's something's going on, and it's slightly worrying because as a marketplace, it's absolutely brilliant. It's access to everything. You can get demos, download. It's brilliant for trying things out, learning new strategies, and all that sort of stuff. But the transactional side of the business is going through the floor, and the important thing for me is people getting access to the products when they want them, how they want them, and that's the thing that they're restricting. And obviously, they're restricting me from actually putting stuff up there. Yeah, there's nothing wrong with my product. I've been using it for weeks. There's nothing wrong with it. It works. It does everything by the book. It's just, I don't know. I'm just so frustrated with the whole thing now. It's just got to the point where I just can't be bothered. It's just taking more of my time than it's worth. So, some banks refuse to accept funds. Trade war. Yeah. Yeah. I mean, this is part of it. I think it's the Russian company that is now not Russian. It is, but it's not. So yes, Russians run it. Yes, Russians built it. Yes, etc., etc. But it's now based in Cyprus and not owned by Russians. Yeah, I can start up a company and put my wife in charge of it, who's half Norwegian, and say it's a Norwegian company. It's not. It's English. It's mine. But you can say what you like, can't you? But obviously, I think there's something going on with what's going on in Russia at the moment, which is causing all sorts of payment problems. So, who knows? I get you, it's pretty frustrating, yes. Bloody frustrating. Certain it's an issue their end. Trading EA forums are full of complaints of validation process, yeah. Yeah, it's not just me. It's one of those loops you get into that you can't get out of. So basically you follow a trail of issues. So you come up with an error message, and the error message is error, and you go, it says error. What's wrong? And they go, I don't know. Why don't you try these 25 forums who all say they've fixed the error, whatever it is. So you start there and it leads you there. You start there and it leads you there. And then by the time you get down to here, it leads you back up here, and you're like, I've tried that one. And then so you scrap that one, and then you move on to that one. And then that one doesn't work, that one doesn't work. And by the time you get down to the bottom there, you end up coming back up here somewhere. And you just end up in this loop of trying to fix something that doesn't give you any information as to what is wrong. Yeah, the problem with it is the error reporting. Error 103 tells me that there's a stop loss take profit problem. So I remove the take profit and the stop loss from the entire EA, strip it out completely so that it does not use them in any way, shape or form, re-upload it, and it gives me the same error. That is absolutely impossible because it doesn't use the thing that causes the error. So that is where you get in this loop, and that is what I spent my entire afternoon doing. Then I went to the gym, and in the gym I made a decision to screw them. So that's where I am. Anyway, so sorry, long-winded rant, but I just don't know what to do. If I buy ORB on your website, I get the latest version. Yes. Yeah. Well, the latest version at the moment is 2.7. Because I haven't uploaded version 3 yet. Because I haven't managed to get it up there. But version 3 is a complete rework of it. Yeah, so it's a completely new version. The logic is different. The way it works is different, totally different. So it's the same strategy, but I've got to do a video, and I'm going to rewrite the manual to cover exactly what it does now. And 2.7 is gone. So if you want the original version 2.7, MQL5 Marketplace, it's going to be there forever because I can't do anything with it. So it's stuck there. So you can have that, but I can't. Yeah, so I've got to redo it. So basically what I'll be doing on the ORB page, wherever it is there, is I'll be redoing this page so I'll do a new video explaining the new logic of the strategy, Obviously new screenshots, but I mean the screenshots are, it's the same strategy really. It's just a reimagining of it, if you like, a better version. And obviously I'll redo the manual. Not that, the manual. So the manual will get redone, because obviously all the inputs are different. It's all simplified. It's just much better. All this stuff about having to change depending on 2-digit, 1-digit brokers. I mean, I built this 3 years ago, and I've never used a single-digit broker, so it wasn't something I'd ever come across. So that was a learning curve for me, really. But I put a fix in for it. I didn't need a fix because you just need to adjust the inputs. But that's all done now. You don't need to worry about any of that because it all works on ADR. And ADR is the same on everything. It's a number. So it doesn't matter how many digits gone. But all this has got to be rewritten so that it's all up to date. New Zealand dollar yen ADR is just here. I'm just going to cover the ORB in a minute. New Zealand dollar yen ADR. Strong New Zealand this morning. That's good for my Euro New Zealand shorts. Weak yen as well. So we've got a weak yen at the moment and a strong New Zealand today. Can you upload version 3 on your website so I can buy it? Yeah, so you'll get it there. Yeah. Will it work on MT5? No, because it's an MT4 version, but the MT5 version will work on MT5. Whether it'll work on futures or not, I have no idea. I'm sure it will. Download a demo. Test it. If it works in the backtester, it will work in. So, with everything on my website, you can download the demo in the same way as you can on the marketplace. Yeah. So download a demo. It's not out yet, obviously. So this is version 2.7 here. But you download the demo, test it in the tester. If it works in the tester, it will work on your account. And I'm also doing 7-day trials. Again, this is something that MQL5 did not allow or do not allow. So it's fine using the backtester to figure stuff out, which is great. You can do back testing, you can test different strategies, you can play around with it, you can see how it works, you can understand the logic, etc., etc. But people want to try stuff. So I can now give 7-day trials. So basically what I'll do is I'll just issue a license for 7 days. So you can stick it on there and you can actually trade ORB for 7 days. See how it works on a live account. See it do stuff. Obviously, if you start it on the week where the market just goes sideways, it's not going to make any money. But at least you can see it working. Yeah. And you can download that, put it on your broker. And if it doesn't work for some reason on your broker because they don't allow micros or whatever reason, then you'll know before you buy it. Yeah. So this is what the marketplace should be. It should allow you to be more flexible and do stuff. Which brings me on to the backtest. So I reran all the backtests yesterday. I was doing this in the member stream as well for the strategy, which I'll go through in a second. So I haven't tested FTSE yet, but I've tested the 4 main indices, the SPY, NASDAQ, and DAX. So all looking phenomenal, way better than ORB was, but it's obviously better logic. So 2.7 works fine with futures. Yep, so should be working fine version 3 then. Yeah, I don't trade futures, so I don't know is the honest answer. I don't trade futures on MetaTrader 5, so it should work. All EAs do is basically place orders and manage orders, yeah, based on logic. So as long as the code is okay to place orders and your broker allows those orders to be placed, it will work on anything. I can't vouch for any instrument that I don't trade, but it should work on everything. Everything should work on everything. So yeah. Yeah, I'll let you know when it's out. But this is the back testing that I've done. So what I did yesterday was I reran all of my system parameter permutation tests. 4050. So yesterday, when I was mucking about with the EA trying to get it on the marketplace, I can't update any of these. I had already done in the region of 1,700 system parameter permutation tests on every instrument, basically. So, and all the results were very good. There was a minimum of 60% within the bell curve that were profitable. On a lot of them, virtually every single run was profitable. So there's 1,600 different variations of the strategy that all were profitable. So I decided to do a more in-depth yesterday permutation test on every instrument. So I ran 4,000 tests on each. So each of these tests took around about 2 hours. And I was testing range size, risk multipliers, maximum lot sizing, the stop loss distance, and trailing stop loss distance, and partial close amount. So with all of them, I decided to close out 75% of the order when you get to your target. So here, so that is your partial close line there. Yeah, so that is where it's going to close out 75% of the trade. So the idea is we close out the majority and then we go for a run. Yeah, and the run is trailed. That's what I wanted to test, because that I found has been the most profitable way to do it. Either closing 100% or 75 and a runner. There's not a lot in it, but it's nice to close 75% and try and get a runner because it makes it a little bit more interesting. But anyway, I did all the testing on all of those permutations. So there's just over 4,000 variations of the strategy run on every instrument. So for the S&P 500, we've got return on drawdowns ranging from 6, and as you can see, there's hundreds and hundreds and hundreds and hundreds, over 1,000, in fact, maybe even 2,000. Let's see where we get to. Nearly. So there's pretty much 2,000 variations of the strategy. 50% of the variations of the strategy return a 2R return on drawdown. Yeah. So whatever you put into your account, it's doubled based on the drawdown. Yeah. And that's just using a standard 1% risk. So phenomenal results, which for the S&P, I was looking on the original ORB strategy somewhere around about the 3 to 4 mark. So this is a 50% improvement in return on drawdown, and the drawdown is tiny. Yeah, we're in sub 4 figures. This is a 2.5K account I've tested on, so we took less than $600, $700, $500 worth of drawdown. Occasionally you get the odd one which uses a lot of drawdown, but that is because the risk multiplier moves up to martingale. I'm not going to do that. I just wanted to see what it would do, basically. But you're not, I mean, if you want to run martingale, you can be safely assured that it's not going to blow your account and it's going to quadruple it. Yeah, but it's too high risk. Obviously, you wouldn't run a martingale based strategy on indices unless you are running just one. If you're running 4, you're going to at some point blow the account. But equally, if you get a nice run, you know, if you want to pay your mortgage off fast, but martingale will blow it, so don't go nuts with it. But anyway, so return on drawdown, absolutely huge. Then I tested the NASDAQ, and the reason that the thing that prompted me to retest yesterday, if you were in the member stream yesterday, you saw me going through the NASDAQ results, and I was like, these look too good to be true. So we were getting somewhere in the region of 10 to 12 return on drawdown. So for those that aren't familiar with return on drawdown, basically whatever your drawdown is, say it's 1,000, for example, if the return on drawdown is 4, then you are getting $4,000 returned for every $1,000 your account is drawn down into. So this is the metric that you should use to determine how profitable a strategy is going to be based on the amount that you're going to risk. Yeah, the profit factor is a fairly decent measurement, but return on drawdown is much better because it says this is what you need to put into your account to generate that much revenue. So if you 10x that, you 10x that. Yeah, so return on drawdown is a much better metric to use for system stability and system profitability long term. So I found the NASDAQ results, which I did those 1,400 or 1,600 tests or whatever it was. And I was getting figures high, like tens. Normally in a strategy, if you find a 10 return on drawdown, there's something wrong with it, because the market is random in its movement. So what it means is you found a repeating pattern that repeats like clockwork, and it isn't normal, because market regime changes. So I decided to retest based on that, thinking, okay, there's something wrong with the test. So my conclusion was that with the NASDAQ, it's probably hitting an upper lot size limit. So that's why I decided to increase the maximum lot size. So I decided to test 3 different permutations of lot size maximum, 10, 20, and 30 lots, meaning that if you are multiplying the risk, basically, to try and recover losses gradually, you're going to get bigger lot sizes. So my thought was it's probably hitting a max, and it's maxing out there and then getting a home run or something. Wasn't quite sure, but that's what I wanted to test. So this 4,000 tests that I ran is obviously 3 times as many variations running with more inputs, and it's put the return on drawdown higher. So I've got a 17 return on drawdown as the maximum now. So this thing on a $2,500 account drew down by $600 and generated 10.5K in a year. Yeah. This is on 1% risk, conservative risk. Yeah, you could easily double or treble that within the drawdown limits and return 30K on one instrument. Yeah, this is on a $2,500 account. Imagine putting this on a 10K account, a 100K account. Phenomenal. However, this is using martingale. Yeah, so we've got all these martingale numbers in here: 1.8 multipliers, 1.6s, 2s. Too rich for my blood. I'm not going to be risking that high. So a normal multiplier for me for loss recovery would be somewhere in the region of 1.1 to 1.2. We're still getting 12.31 return on drawdown at 1.2 lot multiplier. Yeah. So what this has done, this test that I ran yesterday, has confirmed that it wasn't a fluke on the NASDAQ. Those results that I was getting, they are in fact off the scale. Now, the NASDAQ obviously is the most volatile index that we have. Therefore, it makes total sense that in a breakout strategy based on momentum and volume breakout, this is the one that's going to kill it, because it's got the most volatility. Therefore, the bigger candles go in on the volume, because you've got more volume going through, you've got less liquidity, you've got more ticks basically running through the market at the time it opens on the NAS. Yeah, a breakout strategy is going to kill it further, much bigger and better than all the other indices. So looking through these results, I've got 4,000 tests here, and I'm just going to scroll down until we get to a break-even point. There. Okay, so out of those 4,000 tests, we break even at 3,156. So it means that basically 66%, yeah, think of a standard bell curve with deviations and outliers, yeah, 66% of these results will produce a profit in all likelihood moving forward. So the edge is huge. These outliers are going to be the ones right at the top and right at the bottom of this spreadsheet. So it looks as robust as anything I've ever seen, basically. I can see why Tony Krabel dragged it with kicking and screaming and developed it so far, because it is a phenomenal strategy. But the way that it's being implemented by this version of the EA seems to be giving it an even bigger edge, which is phenomenal. So yeah, it's looking really, really good. The Dow, which is the slowest moving index we've got, again, producing 6s up here. So 6 return on drawdown. Not using martingale, it's using 1.2 multipliers. The martingale ones do produce high results as well, as they will. But the interesting thing to take away from these tests, I've got 4,000 variations of the strategy, using everything from a 1.0 multiplier to a 2, meaning we do not change our lot size. It's standard, it's 1% risk, we never touch it, on going up to doubling our risk every time we lose to try and recover losses. Yeah, they all work, and they all produce high return on drawdown. So again, it says you do not need to use any kind of lot multiplication to make money with this strategy. NASDAQ. We've got good ones in here as well. 1.2s, 1.4s, 1.4, still a bit aggressive, but 1.2 is what I use anyway. It's returning huge returns. The S&P, again, 1.2s up here, up in the 6, 5.5s. There's plenty of them. And the Dow, you're better off not using lot multiplication with the Dow. It's so much slower. So yeah, all good, basically. The Dow is nowhere near as profitable as the rest, but on the days where the others aren't performing, this one will probably slow grind you to profits. You know, it varies. The DAX, again, off the charts, 9.43 return on drawdown using a 1.2 multiplier. So incredibly low risk, which is the beauty of the ORB strategy. Yeah, it's hard to get stopped out multiple times in a row on a strategy like ORB because stock indices do not hang around. They do not go sideways for weeks on end very often. Every now and again they do, but the vast majority of the time there's a momentum breakout to target. So, you know, like we're seeing here. Right now I can close this whole lot down with $1,000 of profit. And again, this is the fully automated results I'm going through. The discretionary results where you go, I made 1,900 loss today. I think I'll just grab this grand and take half of yesterday's loss back. That's not accounted for, obviously, because it's discretion. But, yeah, I mean, DAX, the Dow as well. Sorry, the DAX. Great results. Depending on which multiplier you use, it doesn't really matter. These are all 5s, 4s, 3s, 2s. Yeah, we're 1,500 results in. We're still getting 2 Rs. Yeah, stupid results. But the key metric that I'm taking away from this is range size multiplication is different on each instrument. Now, that is a slight problem because there is a possibility of introducing curve fitting. If we suddenly say on the DAX, we're going to use a minimum range of 10% of ADR, but 10% of ADR on the NASDAQ actually is good as, oh, sorry, no. Yeah, 10% of ADR on the NASDAQ is not as effective. You need to use 20%, but that makes sense because it's more volatile. So what it's kind of indicating to me is the high volatility pairs like the NASDAQ, you want to wait for more movement before you get in to confirm that we have a moving market. On the DAX and the Dow, where we're a little bit more reluctant at the open, or the S&P, for example, as well, you're going to want to use a slightly tighter range. So again, these can all be fine-tuned, but I'm trying to, and I like to do this with all strategies that I trade, try to use exactly the same inputs on every single instrument, because that way you are eliminating curve fit completely. Yeah, if you pick exactly the same input and put it on 4 instruments, and all of those instruments in backtesting produce profitable results, lights went off, there is no curve fitting introduced. And if there's no curve fitting introduced, your backtest is 100% reliable. So I always try and keep exactly the same settings. So I will be using, and as I am here, and as this has been using, exactly the same range sizes, exactly the same lot multiplication, exactly the same targets, exactly the same stops. There is nothing different on any of these instruments which is returning this result. So the backtesting kind of is confirming that I can pick any single one of these 4,000 systems, if you like, 4,000 strategies, and whichever one of them I pick, if I replicate those exact settings on every single instrument, they all return a profit. So yeah, it's super robust. More robust than the original opening range breakout strategy, because I think in there was a little bit of tweaking that I did, which quite possibly curve fit it. And it does get the same results as the backtests, but it does have a lot more stagnation than the backtests. But then the markets are different to the backtests, yeah, especially now. Yeah, this Trump move that we're going through now, we can't backtest for this. That hasn't happened, does it? It has actually. It happened in 2022, a drop of this magnitude. But it wasn't on New World Order. It was on just other stuff. But so yeah, so the results are really, really, really good. Obviously, the EA has a lot of inputs. So, you know, what I'm saying here, basically, in my testing is I'm testing the things that I think are important for the strategy. You could test every single input. There's a lot of them. But time when you get out. So you could say, right, well, I want to test closing the DAX at lunchtime, not at the end of the day after the New York session. You're going to get totally different results on the DAX. But if that's the way you want to do it, that's the way you want to do it. So yeah. So anyway, that's my plan today, is to try and get that manual done and try and get this finished off. But there's a lot of work for me to do, let alone videos I've got to produce to obviously explain how it works. But in a nutshell, yeah, it's brilliant. I love it. But it's still not bulletproof. It's a breakout strategy, and 80% of breakouts fail. Or the most frustrating thing is they go like that. As we saw yesterday. Yesterday was a lovely, if you look at the live stream yesterday in the morning, I was $1,000 up. And this is the problem with this strategy that I find over and over again. Look, that was yesterday's long. Oh, we took a short yesterday as well, which at the end of the day, but that was yesterday's long. Ended up as a loss. That was over $1,000 in profit. If you add discretion in and look at that accumulation and retest, it's logical that you get a bounce there. Should have taken the $1,000. I didn't. And I didn't specifically yesterday because I wanted to let it run. Because when I do take it, it does that and hits target. There is never going to be a setting you can put on an EA that is right, because you don't know what's going to happen in the future. Should we be closing this out now because we're seeing bearish price action for 30 minutes? If your answer is yes, take your $1,000 now. If your answer is no, take your $2,500 in 2 hours' time. What's going to happen? One of those two things I can guarantee is the right thing to do. Unless you've got a time machine, no one's going to tell me which one it's going to be, are they? So we will see. Right. That's all I've got for you on that. Any questions on that? Thanks for subscribing, Deep Amazon Sounds. Good name. Are you trying to promote a Spotify channel that has sounds of frogs in the Amazon or something? I don't know. Any lot multipliers would not work with fixed contract sizes in futures. Nope. I don't know, Vitaly. I don't trade futures. So I know in futures you can only trade single contracts. Yeah. So, but I don't build stuff for futures. I build stuff for CFDs. My question to you is, why are you trading futures? Why not just trade CFDs? Because then you've got all the flexibility in the world. Can you not trade CFDs at all in the US? Will they only let you trade futures? If that's the case, then yeah, I don't know. But yeah, so what I've done as well is yesterday I implemented a new input as well. So remember what I said in the marketplace, so this will probably interest you, Vitaly. You can't trade CFDs at all, okay. So what I basically, when I was trying to get this into the marketplace yesterday, I was like, right, okay. So you've either got a problem, Mr. Marketplace, with either the lot size, or you've got a problem with the stop loss and the take profit. That's what I read from that error. So I thought, right, what I'll do is I'll get rid of the stop loss and the take profit. So I just basically uncoded it. I stripped all that code out. Anything to do with stop losses, trailing stop losses, everything. I stripped it all out, tried to upload it, and it went no. So I was like, right, okay, well, it's not that. Then it's got to be something to do with the lot size. You don't like the lot size for some reason. So I input a new input into the EA, which is lot size. Okay, so you've got amount of money to risk, percentage of balance to risk, and I thought I'll put a lot size in there. So you can enter a fixed lot of 1. And I thought, see if the American guys will like this because they can only trade single contracts. So there you go, I'll put that in there. So I put that in there, still didn't work. So you do have the facility in the EA to not use those and only use lot size. So you can set a 1 in there, and then your lot multiplier will also have to be set at 1. But again, this is the problem, isn't it? And this is why prop firms don't allow you to trade micros, most of them. They only allow you to trade minis or standard lots because they want to remove your risk control. Yeah, I want to risk 0.5% of my account on a trade. You can't do that with a fixed lot. You have to risk a fixed amount. I don't want to risk that amount. I want to risk a percentage of my balance because my balance is a variable. Yeah. But anyway, so yeah, you can do that. You can use 2 and then it's real martingale. So if you want to use a standard lot with martingale, you're going to get some of these results here. Oh no, sorry, not those ones. These ones. So on the Nasdaq, for example, you'd only be getting this 17.4 return on drawdown. Oh, damn! I'm only going to get 17 times the drawdown back. I mean, obviously the martingale ones. If you go down and look at the lowest results, yeah, the biggest losses, they are also martingale. Yeah. And they are max lot size of 10. So basically what this is saying is, actually, so all of them, it's 10, 20 and 30. Look. So yeah, I mean, I just wouldn't do it. Just use a standard lot and stay on a standard lot. You don't need loss recovery for this. Yeah. So this is the original testing that I did here. Yeah. Martingale factor. This is a different input, but same thing. But martingale factor of 1. No lot multiplication whatsoever. Nasdaq still returns 9.5 return on drawdown. Yeah. So you put your maximum drawdown on your account in a year was 380. You returned 3,600. It's a 10R with no martingale, no loss recovery system at all. I've built a really complex loss recovery system into this EA. It's very clever. It checks your balance. It checks yesterday's balance. It checks your weekly balance. It checks your starting balance. It checks all sorts of things, and it adjusts lot size dynamically based on your lot multiplier, dependent on what the profit today is, the overall starting balance, your current account balance, and what happened yesterday and the last week. It's really complex logic. Don't need any of it. You can just use a standard lot and make money, right? But I've built a very clever lot, and I'm not even going to explain it in the video or the manual because I don't really want to for a start, because it's really clever. But also, you don't need to know about it. All you need to know is if the strategy is starting to falter, it will do everything it can to get you back to your starting balance so that you don't lose money. And that is the reason these numbers on drawdown, I think, are so low, and these numbers on return on drawdown are so high, because it's battling really hard not to take drawdown. It knows when it's going into drawdown. It knows when it's on a bad beat, and it then tries harder to get you back. But when it gets you back to where you need to be, it then calms back down again. Yeah. So it's not one of these things where you suddenly see it go because martingale kicks in, and it stays martingale until it dies. It goes, I'm martingale until I've got some of the loss back. Whatever percentage of loss I manage to regain from the bad run that we're in, fine, reset, start again. So what it means is the equity curve goes like that. Yeah. You're going to have that. You can't avoid that. When the market is ranging, it's not going to work. It's a breakout strategy. But what it's not going to do is go like that. If it ranges for 3 weeks, it's going to go like that. Okay, we'll start again. Yeah, so it's very complex logic, but you don't need it. So, just, I wouldn't worry too much. This is the beauty of these tried and tested strategies. This was made by Tony Grabel decades ago, and it still works today because it's not based on market conditions 10 years ago. It's not based on fundamentals. It's not based on the stocks included within the index. It's not based on anything that is unable to change. Yeah. So it doesn't matter in the Nasdaq, the Dow, the S&P. It doesn't matter what companies are included in the index. What it relies on is the fact that by the very nature of what the market is, it will explode at some point because of a volume of order. And that is what the ORB strategy is all about. It's irrelevant why it's exploded. Doesn't matter who the president is. It doesn't matter what the news was yesterday or this afternoon. It doesn't matter if Tesla's stock price is collapsing. What matters is market participants will react and make it move further. And that's basically what ORB is. We are breaking out this morning. Why? Because market participants have got a reason. What's the reason? I couldn't give a shit. Doesn't matter. It's happening. That's what we're interested in. We're not worried about why. You can look for the whys, the wheres, the whats, as long as you like, but they're not going to help you make money. If it's moving, it's moving. Get on board. And if it doesn't, it doesn't. But when it does, most of the time, it continues. And that's what the strategy is. And that's all his edge was when I see something go hard, I go hard with it. And it's the same mentality as open. It's what's called open outcry in the pits in the in the stock exchange. Open outcry was basically volume. So a lot of traders traded on volume, and the volume was literally volume. So they would hear a load of shouting and screaming from one side, and they would shout and scream with them because they knew something was happening. They were making money and get excited. So I'm going to get excited and make money with them. And when it all went quiet, I stop. Momentum breakout. And this is what the whole thing is based on. It's based on open outcry. It's movement. Yeah. If you ask anybody that's worked in the pits, they will, there's really interesting interviews on YouTube and stuff with pit traders, where, you know, a lot of the trading decisions pit traders make or made in those days was based on the facial expressions of people. If people were crying and you could see they were visibly in pain, you basically just ask them what they're doing. They're, I'm selling Amazon. They go, okay, buy Amazon, because that guy's really getting it wrong. If he's really getting it wrong, it's going the other way. It's to do with the opposite to what he does, opposite of crowd mentality. Yeah, but it's all based on volume, isn't it? He's only crying because something's happening. If something's happening, now's the time to get into the market. If nothing's happening, you sit there and you wait. Very, very simple. This is why it works so well, because it's a simple strategy. It's not based on anything complex. Is it moving? Yeah, buy it. That's it. It's very easy. Easy to trade. And the way it calculates ADR, same way as there isn't any other way of calculating ADR. ADR is ADR. You can't calculate it in any other way. It's average daily range. There isn't. The only input you've got for ADR is a number. So you can input the number. So I use ADR 10. But you could use ADR 14, ADR 30, use whatever you want. But ADR is ADR. It's literally calculate the range of the last 10 days and average it out. That is your average, and that is the number. So this here, look, ADR in pips. It's not in pips. I mean, I just use pips, but it's ADR number. That is the distance on the chart it's moved in the last 10 days on average. That's it. So that is what it's basing all of its calculations on, is what it's doing on average. That's the same in futures. It's number. It doesn't matter how it's calculated. It's just a number. ADR. Afternoon, Elevated Trading Hub. Morning even. What's the difference between ATR and ADR? ATR is the average true range. ADR is the average daily range. There isn't a best because it's the same thing. Go and watch the video on this page. This video explains what ADR is, how it's calculated. It goes through all the math logic, if you're interested. But just know it's the average movement on a daily basis. It's what everybody that makes money uses. Yeah. So if ever you see anybody talking about pips, yeah, they are not going to make money. Yeah. So if anybody ever talks to you about pips, run. There's nobody on the planet making money institutionally or in retail that uses a pip count to make money with. You can't use pips. If you use pips, you're fixing a number to an instrument. Instruments are variables. If you fix a number to a variable, it will break out of the number and it won't have the same effect. So if you say, I've got a brilliant strategy, it uses a 10 pip stop loss and a 20 pip TP, yeah, when that thing is moving 30 pips a day, that strategy will probably work. When the ADR of that instrument, because of news and volatility, moves up to 130 pips in a day, that thing will be stopped out within seconds. Constantly. Your P&L will just go because it's not dynamically adapting to the range of the instrument, which is what ADR is. It shows you the dynamic range at the moment of how it's working, which is why I use a 10 ADR, because I'm not interested in the range of movement back here now. I'm interested in the range of movement now, because if I base my strategy on that, when it's moving like this, I'm either going to get stopped out way quicker than normal, or I'm going to miss 90% of my profits. Because if I'm getting out with 10 pips, because that's where it was when I based it on my strategy, and it now moves 100 pips a day, I'm missing 90 pips of profit. So you use the average daily range. The average daily range in there and there is totally different. Yeah, if you look at the ADR dashboard, the pound New Zealand here, I used to trade, that's an RSI dash, so ignore that. I used to trade the pound New Zealand when it was trading 450 pips a day. It's trading 158. So do you think my strategy that I developed 6 years ago when the ADR was 450 is going to operate in the same way now the ADR is 150? It's not going to work, is it? I used to use a 50 pip stop loss, and that was about 5% to 10% of the average daily range. A 50 pip stop loss now is 33% of the average daily range. It's not going to work. So unless you're using ADR, you're dead. It's just not going to work, because you could develop a system or a strategy that uses pips over a period of 6 months. If the next 6 months average daily range is different to the 6 months you develop the strategy on, the strategy performance will be completely different. If you use average daily range to develop your strategies, it's a variable that moves with market volatility. Therefore, it doesn't matter what market volatility does in the future. You will be basing your strategy on the average movement of market volatility. Yeah, so you've got to use a dynamic measurement for instruments, which is why you find risk is adjusted dynamically based on ADR. So all the products I have, you risk a multiple of ADR. So I'm risking 1% of my account, for example, over half an ADR of movement. Half an ADR of movement is going to be a different measurement every day, but it's fairly consistent. Where's the... So if you're not a member, you can't access this video, but there's a video. No, there isn't. No. Sorry, I'm lying. It's this one. Which ADR is best? This is a video. It's worth watching as well. So, oh, there you go. There's the chart. So this is another research project that I did on ADR. So I wanted to see what the difference between a 5 and a 60 ADR is. Yeah, so you can see the spike here, and then you can see the spike of the other ADR there. So this is the volatility. This is basically a measurement of ADR over time. Yeah, and this blue line here is ADR 60. You can see how little it moves. So if you base your strategy using an ADR 60, you're going to use consistent lot sizing within that to that. So that is going to be your variance of risk. If you're using a slower ADR, you can see that it adjusts itself as price moves up and down. It adjusts itself dynamically a lot faster, which is why I use an ADR 10 for most strategies, because if the market is kicking off because Trump's just announced something, you react within 10 days. So you're adjusting your risk parameters within 10 days of it happening, pretty quick. If you use a long-term ADR or no ADR at all, when the market is doing this, your risk is still here or here. Yeah. So you're not reacting to current market volatility. And if you don't adapt, it just won't work. You can't do it. It just doesn't work. So go and watch that as well. That's an interesting one to watch. But this is specifically based for position trading. It's all the there's a load of statistics. If you're interested in it, it's worth watching. If you're not, just trust me. If you don't trust me, watch it and then make up your own mind. There you go. Right. Pulling back a little bit at the minute. Right, that's all I've got for today. Morning, Ploughman. You're late. I'm just about to go. So anything you need, let me know. I'll be in Discord. I'm going to finish off, hopefully, what I need to do on the ORB V3 today. And then I've got all the support content to do. So I don't think I'm going to get it out today. Can I put a link in the chat? To what? I don't think I'm going to get it out today because I don't think I've. It doesn't matter. You can't use it today anyway because next breakout's on Monday morning. But anyway, can I put a link in the chat? What, for the live stream? Yeah, every day. Oh, I just spoke about. I just did. If you go and watch the replay, you'll be able to see the chat. What was I saying? Yeah, so I don't think I'm going to get it out today because I've got to do all the support content, and the support content takes half a day to a day to do. MT5 will come, yeah. That's always after MT4. So again, I'll convert all the code into MT5. If it works first time, brilliant. If it doesn't, I have to fudge about with it for a bit. And yeah. But it will work for MT5 as well. Don't worry. But it that's a point. If I'm doing it on my website, I can't really release one without the other, can I? Yeah, that's the only problem. I can't actually release it until I've got the MT5 version done because it is one product, so or one strategy. So I'm gonna have to do the MT5 version as well. So yeah, it's definitely not going to be today. I didn't think of that. Yeah, that's fine. I'll sort that out. I'll do the MT5 version as well. Shouldn't be too difficult to change actually because the logic on it is really simple. Please read your messages in MQL5. I wrote you a PM. Do you want me to read it now? Oh, who are you? We are one. Is your name Shi Hong Yan or is it DNK Rocks? Morning, Guna. DNK Rocks. Apologies for being late. That's okay. You don't have to apologize. It is just a stream. It's not class and you're not paying. So you don't have to apologize. You can turn up when you like, not bother at all, never come again, or whatever. I don't mind. I'm trying to set up the price action toolkit auto trading function for the Frankfurt and New York opening range. But the problem that I have is that there are times for the times for the opening ranges. I'm using IC markets. What actual time do I have to enter into the Frankfurt and open? It is very complicated with all the different time zones and summer and winter. Another question, do you have working set files for the opening range auto trading function? Set files are all in the Discord channel. Should be. There's not really any set files, but if you read the manual here, Oh, it doesn't actually explain in there, does it? Okay. So the best way to do this is if you go and look at the manual for the ORB EA, which is this one. Yeah. This explains how to find the open. Yeah. So finding the Frankfurt and New York open. Yeah. So the easiest way is to go into your chart and click on show volume. So if you go into, let's do it on the FTSE here. Okay. So if you go into your chart, just right click, go to properties, and then click on show volumes. Yeah. That will show you the volume at the bottom. If you scroll out, you can see very, very clearly these volume spikes. That is the open. Every day, behind my head there's one as well. Every single day, that is the open, the highest volume point. So all you do is you go to that big strong candle there, hover over it, and you can see the time on my chart, you probably can't see because it's tiny, is 11 a.m. Okay, so on my broker chart, and this will be different for each broker, that big volume spike candle is 11 a.m. That is the London Open, the European Open. It's 8 a.m. UK time. On my broker, it's 11 a.m. When summertime changes, it becomes 10 a.m. Yeah, so it's, for me, on my broker, this is Robo Forex, but this is Global Prime, and Global Prime is still the same. You'll find they're virtually all the same. 90% of brokers these days use UTC plus 2. Yeah, so that is 10 o'clock. Normally, when the clocks change, it's 11. When the clocks go back, it's 10 again. Yeah, so the easiest thing to do is to look at your time where you are, right? And the inputs are going to be, in this case, for me, 11:05 is the 5 minute. This is a different EA, but it's an opening range breakout EA, so it uses the same time frames. It's 5 minutes past 11 for me, is the 5 minute ORB. So the first candle that closes after the open is at 5 past. Yeah, so that is the easiest way. So just go to properties, volumes, and then look at where the volume spikes are. That tells you where the open is. 11 a.m. 11 a.m. 11 a.m. But if I go back, right? If I go back to last week, back here, these volume spikes are not at 11 a.m. They are at 10 a.m. because clocks changed, right? If your broker uses US timings, your broker will change time. If your broker doesn't, they won't. And this is the other really confusing fact about brokers, times, and everything to do with opens. Yeah, they're all different. So some brokers will be different. There's nothing you can do, which is why I use the volume trick, because the volume trick works everywhere. Yeah. So that one there is 11 o'clock. If I go back to here, that one is 10 o'clock because the clock's changed on Sunday. So this week we're on 11. Last week we were on 10. We will be on 11 until the end of March, and then the beginning of April we will go back to 10 again. Bloody annoying. And do you know what? The first time you realize it's changed, you will miss those trades, like I did on Monday. Monday, I missed the trades. Actually, I missed the London session, but I caught the New York session whenever it was. But I made nice money in New York because the New York ones didn't change. But the ones for DAX and FTSE changed. So that would have actually been bigger because Monday they were both clean breaks. But unfortunately, I missed them. It's interesting you're using the price action toolkit. Everybody else is using ORB or SIH to trade it. But price action toolkit does have opening range strategy in it as well. It's just not as complex. But there you go. That's how you do it. It's the bugbear of everybody's life, unfortunately, to do with the opening strategy. But it's only a couple of times a year. it goes awry, and you may miss 1 or 2 days a year for it. That's it. The only thing you've got to be aware of is in backtesting. I kind of ignore it these days, but in backtesting, you're going to get a couple of weeks in your backtest where it's just going to be wrong. So you kind of have to just assume I was on holiday when the clocks changed and I left the EA running, and that's what I would have got. But you can find out what times changed every year, and you can run lots of small back tests and stitch them all together. I just can't be asked. If the vast majority is working, I'm going with that, because nothing's exact, is it, in trading? So, but yeah, that's how you do it. There you go. Look at that. Answering a live question from the MQL5 marketplace on air. I think that's a first. Right. On that note, I'll leave it. So I'll get on with my stuff. Anything you need, let me know. I'll be in Discord. I'm back on Monday. We'll see what's going on. Bear in mind, this afternoon we've got University of Michigan, so there's likely volatility coming through this afternoon. No idea what's going to happen over the weekend. Obviously, we don't know anything. Putin-Trump call to be determined later. This isn't going well, is it? Trump, I'll have it fixed within a week. No, you won't. It's not going as Trump anticipated, I don't think. So probably Russia tariffs are on the way. So, yeah, we'll see what happens over the weekend. Obviously, try and get as flat as you can constantly at the minute, because you've no idea what's happening every weekend at the minute. Every day, everything is just changing. So there's nothing planned over the weekend. But then again, we never do have anything planned over the weekend, do we? Next week's news, obviously, we've got a fair bit coming in. We've got CPI coming in next week for the CAD. We've got the rates for the Fed not changing. That's going to be an interesting one. I think Powell's on the edge of losing his job if he doesn't do what he's told. But anyway, we've got the Swiss rate, again, dropping. Bye-bye, Swiss. We've got the pound rate. Yeah, it's a massive week next week. So we've got 3 interest rate announcements and inflation. So we've got Trump volatility and fundamental volatility all within the same week. And I think it's not the end of the month, is it? No, we've got 1 more week to go. So, and then we end up with PMIs, don't we? So, yeah, busy one next week. Be fun. So I'll be back on Monday, 8 o'clock. We'll obviously trade all that and see how it all goes. Flav, did you calculate ADR from the NASDAQ over the years? Can't remember. Why? ADR is ADR. ADR is ADR is a measurement of volatility. The numbers in the past have got no relevance with anything. Doesn't matter what ADRs are historic. Doesn't matter what the ADR was yesterday. It's irrelevant. It's gone. ADR is a measurement of volatility. So you're just trying to stay in line with volatility, recent volatility. What the numbers are have nothing to do with anything. ADR is ADR. It's the same on all instruments. If you watch that video on ADR, it explains it. Yeah. If you test ADR across every instrument on the planet, they're the same. The percentages of time it exceeds ADR are 42% on average on every instrument on the planet. Indices, individual stocks, commodities, crypto, FX pairs, fruit and veg. It's all the same. Yeah. The market exceeds average daily range of 10 days, on average 42% of the year. It exceeds that 23%, exceeds that 12%, exceeds it 6%, exceeds it 3%. When you get beyond 200 ADR, the chance of it going beyond that are 2%. Doesn't mean it can't do it, just means that, but it's the same on everything. It's an average measurement of volatility. When something gets volatile, it stays volatile for a period of time and then it contracts. It's the same as everything. Yeah, the numbers are irrelevant. Whether that says 139 or 639, I couldn't give a monkey's. It's how much is it moving, so how much do I need to risk over what distance today? Today I need to risk over 139. Next week I might need to risk over 350. But I need to be on top of what I need to risk over the measurement of movement on the instrument that I'm trading. Every instrument has a different number, but the probabilities are the same on every instrument. It's all covered in that video. I tested every FX pair, and every FX pair came within 1%. So it might be 41, might be 43, but roughly it's 40. 60% of the time, we don't exceed it. That's what you need to know. So your edge, when we exceed that, is 58%. So in a mean reversion, if you're a mean reversion trader and you want to take mean reversion trades, you want a 58% edge, not a 42% edge. You want a 23% edge, take it above 125. That's what it's telling you. Is more. The more it goes up there, the less likely it is to carry on. That's all it does. It's nothing clever. It's just a measurement. Anyway, I'll shut up now. I'll let you go. All right, I'll be back on Monday. Anything you need, let me know. Other than that, I will be in Discord, and I will see you next time. Have a good weekend.